to start straight away with that big question that has been weighing on most market participants. In the last few months, we have seen a pull-out and consequent downtrend in the markets. But with a budget, which is a solid budget, is it time for investors to resume their long-term investment journey and put all the recent negatives behind them?
So, Siddharth, we have to understand the backdrop of this market. From the lows which we made in 2020, markets have given really extraordinary return. A lot of people who are investing like me on individual companies. You have had companies go up 10 times, 20 times, 30 times. A lot of these small and mid-cap companies. And a lot of money is being made in the last 4 years. So this correction is in that backdrop that if you continue to compound your money at 25, 30, 35%, then there is something wrong with the business people who are establishing these businesses and are struggling to make 18, 20% ROE. And as investment community, we can buy their derivative and we can compound at 30, 35%. So that is like unreal, but it happens in the market because market is not always fundamentally driven. It is driven by greed and fear, right? So obviously, a lot of greed has got crept into the market in the last 12 months, I would say specifically. You would have experienced it yourself that everyone wants to do a family office, a lot of people want to do AIF, and everyone wants to be part of the stock market. So I think it is in that backdrop that this fall has come. What I would say, Siddharth, that at this point of time, it is important to understand that these returns are not replicable over the next 3-4 years. And so you have to moderate your expectation. If you extrapolate that and come to market that XYZ made 35% CAGR or 40% CAGR in the last 4 years, and it is likely to happen, I will clearly say very unlikely to happen. That kind of extrapolation of return. So that's point number one. Point number two, does equity still remain a good asset class to play in, given your alternatives? So if you are looking for asset allocation and given the long-term India story, which I am very, very convinced about even from here on, equity still remains a very good asset class with moderate return expectation, right? Third point. Now, how do you play this? So there are phases when for doing nothing, you make a lot of money in the market, basically just on sitting. And there are phases when you have to work really hard. I would say we are getting into a phase when you have to work really hard. And market will not make you money, but your individual stock picking and your bottom-up ideas, they are the ones which will make money.
If you like the video, do like, comment, share and subscribe.